As economists talk with caution about a potential recession, it is worth taking a look at some of the indicators that they might look to or that you might look to. The first thing we've been talking a lot about lately is something called the yield curve. It's having a moment right now. It's a usually obscure measure, but people are talking about it right now. As you can see, it is the difference. The yields, this is a 10-year bond, and this is a 2-year bond. Obviously, the green one is shorter term. The blue one is longer term. You should get more interest when you invest. You pledge to keep your money in for a longer term. So that's typically what happens, right? A longer term bond pays more interest than a lower term bond. That has inverted. That has crossed. In other words, strangely, you don't get more money for keeping your money in a 10-year bond than you do in a 2-year bond. Lots of reasons for that you don't need to know the detail about right now if you don't. But to know that when you go back over several recessions, this tends to be an indicator that there's a recession coming. Maybe many months out, but it does tend to be an indicator. The yield curve is now crossed again. It's inverted 3 times. The next thing, the New York Federal Reserve's recession probability model. At the moment, the measure is predicting a better than 30% chance of a recession. Now take a look at the last recession. It predicted that relatively well, and then there's been no recession prediction since then that's been meaningful. There was some activity in 2013, started going up with the election of President Trump, but it is shot up with all this trade war talk. It's predicting a recession by next fall. Then there's the leading economic index, LEI. This is interesting because when you see some economic numbers, like the jobs number, it's always about the last month. It's not telling you about what might happen next. The leading economic indicators are those indicators that tell you about what's happening next, and it's suggesting that we might be plateauing in terms of our economic growth. And finally, when we talk about economic growth, we're talking about gross domestic product, GDP. Gross domestic product in the second quarter slowed down a little bit. So that's kind of, again, that's when it plummeted in the last recession, and then it popped up, and it's been like this. That's in a fairly normal range of things. You can see that it's flattening up, and it's starting to point downwards. Again, we've got decent growth right now. It's not great growth. So it's really hard. This is not a science. A recession is about people's behavior. When you think you're not going to earn more money, or a company thinks it's not going to earn more money, it chooses not to expand. Sometimes it chooses to lay off workers. People choose not to spend, and that is what brings you a recession. I want to bring in someone who knows more, in my opinion, than kind of anybody else about recessions, more than anybody on the planet. Harvard professor of public policy and economics, Ken Rogoff. He's the co-author of This Time It's Different, 8 Centuries of Financial Folly. He also served as the chief economist at the International Monetary Fund. Ken, good to see you. Thank you for being with us.
A pleasure. Thank you for having me, Ali.
Ken, you're not screaming from the top of the hills that there is a recession on its way anytime soon. You think one will come because you believe, like most economists believe, that they come after a certain amount of time of growth.
Well, we are seeing a sharp slowdown in China. We're seeing a start of a recession in Europe and Germany. And so globally, there is a slowdown. And the United States is going to feel it no matter what. Are we literally going to have a recession? I don't know. I think it's less than 50-50 before the election. But will the economy slow down from all this? For sure.
Let's talk about the president going at it with Jay Powell. He's been doing this for a while, right? So economists are sort of saying, as you do, there's a bit of a global slowdown. The trade war is probably having a net negative effect on economic growth. You might think it's worth it or not worth it to figure out our future relationship with China. But the president says there's zero problem with the economy. It's the strongest in American history. And if only the Fed would do the right thing by continuing to cut interest rates, it would solve the problem. Today, we heard Jay Powell, the chairman of the Fed, who doesn't make a habit, as Fed chairmen don't, of speaking out against sort of political accusations, basically telling the president that's just not true.
What Jay Powell said today was just remarkable. He all but punching President Trump in the face with his remarks. He said, look, we can't rewrite the book on trade. He's basically saying you're blaming us. If you want to know why everyone's worried about a recession, look in the mirror. It was really quite remarkable. Mind you, Fed speak is very measured, but in terms of the Fed and to everyone who was there, they heard it loud and clear. And obviously, President Trump heard it loud and clear because he turns around and says, you know, this person's enemy number one, along with the president of China. I mean, I don't know what to say.
You understand global economics well, and most global economists share the view that in a normal world, there would have been work to do with China and some of its practices that needed to be fixed, and probably would have been fixed if we were part of TPP or there was some global arrangement to have a unified front on China. We didn't do that. So what's the likely outcome now? Because we seem to be escalating our fight with China. You make an interesting point. China is hurting a lot as a result of this trade war. How does this, in your opinion, end?
I have no idea. China is hurting a lot worse than the United States. China is a very big economy that's careening all over the whole world. It's putting Germany into recession. It's putting emerging markets into recession. We're going to feel it. But, I mean, you're not going to get rid of the president of China by making them feel some economic pain. The United States is losing from this also. We're not losing as much. I don't know what the long run will be, and I don't know the right way to go about it. But if you want to assert that what the stock market's worried about, what businesses are worried about, why they're not investing. If you want to assert that's because of Fed policy, that's just nuts. It's mostly this huge uncertainty about what's going on with policy. What is Trump going to tweet tomorrow? It's casting a pall over the economy.
Hey, MSNBC fans, thanks for checking out our YouTube channel. Subscribe by clicking on that button down there and click on any of the videos here to watch the latest interviews and highlights. You can get more MSNBC for free every day with our newsletters. Just visit msnbc.com/newsletters to sign up now.